you ever wondered what time of the day the biggest gains are shown in the stock market? Hi guys, it's Isaac, and I'll be telling you guys when the biggest gains are in the stock market and what the time of day has to do with those gains. I'm just going to jump right into it here. The study that I'm looking at has studied the stock market throughout 20 years, and it found out most gains have happened overnight. Now, when I mean overnight, I mean after hours trading, and the study has found that the S&P has generated over 600% returns overnight, while during the intraday trades, it has been flat since 1993. Now, I'm going to pull up this graph of the percentage of returns between the two after hours and intraday markets, showing you the growth that the overnight market has. Now, they say that the intraday markets just have so much noise and news coming out, but it ends up that nothing really actually happens during that time. Now, it says over the history of the SPY fund dating back to 1993, nearly all of the gains have been outside regular hours. The market's opening hours can be very volatile because some news might have come out overnight, which investors would be reacting to once the market's open, making it more volatile. Studies have shown the first 15 minutes of the trading day are the most hectic and most volatile. In this graph that I've just pulled up, it shows the performance of the S&P 500 throughout each day since 2000 to 2023, so 23 years. As we see, Monday, kind of a lot of talk, but not, that much going on. Tuesday, we see the most growth. Wednesday, a little growth. Thursday, a little more growth. Friday, drops off. Now, in the middle of the trading day, things kind of quiet down. It's kind of smooth sailing from there, just because the news has already been reacted to, therefore making it kind of just not interesting, kind of making it just, But as the trading day closes, around the last hour, things also get very hectic again, just trying to close out the day, finishing the option calls that you have. And so early morning is very volatile because we're reacting to the news. Midday, the news has been reacted to, the prices are what the price should be, kind of smooth sailing from there. And at the end, then late day trading, it gets a little hectic to close out the day. Now, from the chart that I just showed you, it also talks about the best weekdays to invest in. Now, with that graph I just showed you, the study also follows the best days, weeks, and months to invest. There's the term the Monday effect, which shows that the stock market declines on Mondays, possibly due to negative news released over the weekend or investors reluctant to return to work, which I can see that. But studies have shown since 2000 to June 2023, the S&P 500 has recorded negative returns on Mondays. But Thursdays or early Fridays are optimal for selling stocks. They say that short sellers might find Friday a suitable day to enter positions, while Mondays could be ideal for covering those shorts. Notably, Fridays before 3-day weekends tend to see positive market movements. Now on to the seasons and months. March, April, and July yield substantial returns, as well as October and December. There's a term called the January effect that indicates that investment activity often surges at the beginning of the year, especially in small cap and value stocks. However, its impacts tends to fade as it becomes widely recognized. So you can get that early opportunity in January or you're kind of just jumping the gun before everyone finds out to get those gains. Now, there's the September effect. I don't know if you're catching on to this effect thing, but the September effect is when poor returns are linked to institutional investors wrapping up their third quarter positions, making it that traders would want to sell in September. Now, October is kind of in the middle. It usually averages higher returns, but it has also been associated in major stock market crashes, making September somewhat of a safer month to sell your stocks other than October's volatility. Now, I've been referencing after hours trading, but what actually is after hours trading? Well, it refers to buying and selling stocks outside of market hours. Now, this trading period allows investors to react to news outside of market hours. Now, not many people trade during the after hours, therefore making the liquidity lower, which makes it more volatile and more like price jumps. But it is good to note that the next day's opening price may not reflect the after hours price. I kind of think of it as it's kind of like a what's to come for the day. Now, you usually only see after hours trading happen when there's kind of like an earnings report or big news. Now, the pros of aftermarket trading is it's an opportunity for an investor to jump on something early. Makes it more convenient to investors who aren't able to trade during the day. Could show higher returns due to the volatility. But some of the cons are the low liquidity, could lose more money because of the volatility, and you could have some restrictions on after hours trading due to your broker. Now finally, why stocks rise mostly in after hours? Well, we don't really have an answer, but we do have a few theories on why. Now, the first theory is that there's much less volume in the after hours market, for making it easier for big players to kind of have the market kind of face a different direction, helping. Secondly, just earnings. I mean, earnings are so hyped and talked about, and they always come out before or after the market, so there's a lot of noise coming from the after hours market. Third is just the global world with the European and Asian markets, with traders having overnight access to US future markets. And fourth is that central banks use overnight markets to inject liquidity. But the same is true for the downside. All the biggest losses happen overnight. We saw this happen back in March 2024 when the S&P dropped 30% overnight. Black Monday dropped 21% overnight. The dot-com bubble where most losses were found overnight, etc., but you get the point. Market technician J.C. O'Hara at FBN Securities ran the numbers back in 2015 and found something unusual about the trading at the end of the day. He quotes, "If you were just to buy the last half hour of each day, you'd be down 2% even in a bull market," he said. Market experts Alessandro De Corrado and Steve Woolley recall a quote from a UK-based fund manager. "If you have to give numerical forecasts, never give a date. If you have to give a time-based forecast, never give a number." He quotes. Now, this remark humorously captures the immense difficulty of precise forecasting in financial markets, despite the legions of economists, analysts, and strategists who dedicate their careers to this task. But there you have it. That's when the most gains are shown in the stock market. If you guys enjoyed this video, please like and subscribe. It really helped me out. I just love doing these kind of videos, just learning with me. You guys learning with me, like teaching people, like talking finance. If you like listening to me, I guess, just drop a follow, subscribe. I also made a TikTok. I'll link that in the description. And I'll see you guys later. Isaac out.